So we all know this is a cyclical industry, and it's been a particularly tough period from 2011 really through to 2016 when we started to see the commodity price recovery. And during that period, the shareholder returns were really suboptimal. We saw the return on capital being below the cost of capital pretty much consistently for 4 or 5 years. Now, as a result, shareholders quite rightly are saying, now that cash is being generated again, we want to see that. We don't want that reinvested back into capital long term. We want to see some short-term returns. And we've seen that with equity prices increasing, so total shareholder return has improved drastically in the last 12 months. But it's not a long-term strategy. At some point, that investment has to go back into the business, not just to shareholders. So quite rightly, management have been very, very cautious over the last 3 to 4 years. The key issue is, do you remain cautious? Do you keep the memories of the bad capital decisions and make that drive strategy? Or do you start to think about where there are opportunities? How can I invest capital and how do I get long-term returns for my shareholders? And that's really the focus right now, to not be paralysed by the caution of the recent years, but to make good decisions.